You will find these days people are mostly talking about
global recession. A global recession
causes a recession.
whenever it happens, market faces a severe decline. People panics and start selling shares. Economies of countries goes down and face challenge to go up.
But the market's going to go up and down. Human nature hasn't changed a lot in 25,000 years. So volatility will occur, markets will continue to have these ups and downs. I think that's a great opportunity if people can understand what they own.
Generally, people are not aware what to do in this type of situations. I can say remaining calm is the best choice, while panicking can make a huge loss. But still, to know exactly what to do in this type of situation, I think a good idea would be to
You should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot.
doing all this research alone is not an easy task. So I am here for you all to save the time and effort. Okay, let's start now. Let us picturize the 16th century. The basic means of living was on agriculture, and the idea of colonialism, capturing and ruling on other countries, was spreading. On this time, the merchants used to gather funds to take ships over the seas in other countries. They usually goes in voyage to do business with the traders and merchants of foreign countries. After a few years, they return to home by earning huge profit and distribute among them who had been funded the voyage. This was the time when on voyage they faced many challenges like sea storms and the attack of pirates on the ship. Also, many people died in discovering the sea routes. Throughout the Middle Ages, merchants assembled in the middle of town to exchange and trade goods from countries worldwide. People have started purchasing commodities, bonds, and government securities. And soon, the Antwerp bourse have been built in 1531, a commodity stock exchange, which is considered as the mother of the stock market. You might wonder, what the hell bourse meant? It literally means money bag. Okay, back to discussion. Antwerp was the international center of trade and commerce during that period, where people mostly from Spain, Portugal, England used to visit for business. You may think where Antwerp is now. It is in the current days Belgium. The financial and economics of this country was being accelerated in this century. But you know, everyone has its own breaking point. Soon, in 1572, Spain declared a war and captured the city. The river Scheldt had been blocked, which was the trade route for business and commerce. Due to this restriction and the unstable situation of war between Spanish and Dutch continued next 80 years, and hence the importance of this city was shifted to Amsterdam. The early 17th century. Till now, the people were only dealing in bonds and government securities and not in publicly traded company shares. But the scene changed after the construction of the Amsterdam stock market, built in 1602. It was the place where the first company of history listed as a publicly traded company, the VOC, or the Dutch East India Company. It has launched its shares and started paying dividend from 1607. This was the time when people in big ships used to go to voyage to do business. Since they have not all the money, so they have sold some shares to gather the capital they need for their voyage. They usually visit India for spice and China for silk. After generating profit, they return to home and distribute the profits as dividends among shareholders. This is the way Dutch East India Company got success and Dutch Golden Age had started. During the early 18th century, the British East India Company had one of the biggest competitive advantage in financial history. It was a government-backed monopoly. When the investors began to receive huge dividends and sell their shares, other investors were hungry for a piece of action. The financial boom in England came so quickly that there were no rules or regulations for the issuing of shares. The South Sea Company, SSC, emerged. Before the first ship have ever left the harbour, the shares were sold as soon as they were listed. Encouraged by the success of the SSC, and realizing that the company had not done a thing except for issuing shares. Other businessmen rushed. During this time, any random XYZ company was showing up and offering shares in their ventures. And the most interesting of all, a certain company showed up, distributing shares, said, "We are doing such an important thing that details could not be revealed." They all sold. Before we pat ourselves on the back for how far we have come, remember that these blind pools still exist today. Inevitably, the bubble burst when the SSC failed to pay any dividend on its meager profits. Later, near the end of this century, a mysterious man became a hero, emerged in the city where trees were more than skyscrapers. At this century, probably. Yes, it is in Lower Manhattan. He made the stock rise up, and everyone enjoyed the beginning. Let me give you an idea first about this man. It is William Duer. People often say he was the cause behind today's Wall Street. Duer was a member of the Continental Congress. He was a good friend of a New York judge, Alexander Hamilton, an upstanding member of the society. He was also secretary to the Board of Treasury, and that's where all his troubles began. Due to his position, he knew all the ins and outs of American finance and resigned the treasury. After that, he forms a partnership with a man called Alexander Macomb, one of the New York's wealthiest individuals. Then he combined his insider knowledge and Macomb's money and started a new game of speculating stocks of Bank of New York. Proceeding further, he started betting on every bank stock he could find, and just like any gambler, he couldn't stop. He was the center of attention. When he ran out of Macomb's money, he started borrowing. He borrowed from banks, brokers, shoe signers, shopkeepers, street sweepers. He borrowed every last dollar he could get his hands on. He kept on borrowing more and more. His stocks were soaring higher and higher, and Duer and his newfound friends just couldn't get enough of a good thing. Everybody was in the fun, even the local undertaker. But things didn't last long. There is no shortcut to success. Prices starts falling and created the financial panic of 1792. After that, Hamilton somehow handled the situation. During that time, there was no rules governing the stock market. Stocks were bought in streets and coffee houses. People were not sure either their money is really being invested or not. Hence, to ensure trust and authenticity, an agreement took place under the Buttonwood tree, which is known as Buttonwood Agreement. Okay, till now, we have discussed about many histories of economic and financial ups and downs. At last, the 20th century and us. How the two timelines intersect each other. We are going to discuss in this final part. According to our research and knowledge, the economic and financial condition of today's world are relatable during the late time of World War I in 1929. Situation was serious. The foreign relations of countries was not that well with each other. Tensions was rising around the border. Unemployment was rising. Supply chains were disrupted. The prices of commodities such as oil and gold was increasing. People were scared. Many lost jobs. At the end in the year 1929, US faced the recession and soon followed Great Depression. The ripple effect felt across the sea over continents of Europe. Our today's situation also looks similar to these. The prices of oil shoot up. US posed sanctions on many countries like Iran on oil. War are frequently happening between Russia, Ukraine, also Israel, Palestine. Many trade routes were even blocked today. US faced the same problem. People are unemployed. Supply chains were disrupted. It seems like history repeats itself. In the market, experts are predicting that we are going to be ended in a recession. Some among them is declining the fact, but what will be the final outcome? No one can actually predict it with the right time and efficiency. It's beautiful to know that despite of having all intelligent brains and privilege of using advanced technology, no one can predict the next 5 minutes of their life. According to us, we believe that throughout this year 2023, uncertainty will be there in the market. According to great players of stock market like Charlie Munger and Peter Lynch, there are three things we need to keep in mind. Number one, we should not take any drastic decision based on emotion and we must hold our investments. Number two, we should sell the stocks that are going to get bankrupt. Mostly happens when you buy stocks from any bubble. And last, number three, you can diversify your investment in mutual funds, bonds and real estate or commodity market. That's all. It's such simple. Remaining cool and taking decisions wisely is a clever decision. Where everyone around us going to panic, this is the point that can differentiate you from your peers and can lead you towards your goal. Thanks for watching the full video. If you want to know in more detail, comment us below. We will make another video on that. If you find the video useful, share it with your friends who have similar interest. Make sure to check that the documents we have attached below in description box to get a more detailed view on past and modern recessions. Have a nice day.